please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
First up, let's take a quick check on the Asian markets. They narrowly mixed on the first trading session of the second half of this year. Trade tensions between US and its trading partners still remain the key concern for investors out there. The Nikkei, that had opened up more or less flattish with a bit of a negative bias. It's recovered from the low point of the day. Remember, the Chinese central bank has set the yuan midpoint at around 6.61, and that is against the dollar. That compares with around 6.62. So keep an eye out on that one as well. Markets in Hong Kong, remember, they are shut today for a holiday. So what cues that we have for now, the Kospi as well was under some pressure. That's down close to around 0.4%. Let's see what the other couple of markets have done. Well, the Straits, that's a relative outperformer, sitting with a gain of around 0.3%. The SGX Nifty was indicating a flattish start, and a flattish start is what we could brace ourselves for in the next couple of hours.
Okay, so that's what the SGX is indicating. But let's tell you about what took place on Wall Street. Markets rose on Friday, which was the last trading day of the first half of the year. So the Dow rose around 55 points with Nike outperforming. S&P 500 and Nasdaq gained 0.1% at close. CNBC's Josh Lipton gets us a wrap of all what took place on Wall Street.
Well, turning attention to the European markets, the key markets out there, they ended in the green after European Union leaders, they hashed out a deal on migration. However, underlying market sentiment was soured somewhat by the ongoing anxiety over the global trade functions that are prevalent as we speak. So remember, the DAX ended with a gain of around 1%, so that was a relative outperformer. The CAC ended with gains of roughly around 50 points, while the FTSE, if I compare it with the other three, in fact, it was a relative underperformer, ending with gains of around 20 points out.
Okay, and crude oil falls in early Asian trade today following comments from the White House that the leader of Saudi Arabia promised President Donald Trump that he can raise oil production if needed. Remember, Trump had tweeted over the weekend, and I quote, "Just spoke to King Salman of Saudi Arabia and explained to him that because of the turmoil and dysfunction in Iran and Venezuela, I am asking that Saudi Arabia increase oil production maybe up to 200,000 barrels to make up the difference in prices." Too high, he had agreed. The White House and the Saudi Arabia press agency both released statements after this tweet, and both said that the two sides had discussed oil and how to address the shortage. However, none of the statements talk about a target being set by the authorities of production increase at all.
Okay, all right. On that note, then I think we'll slip into a short break. You come back, we'll tell you all the cues and news that are stacked up for us when we open up for trade in the next couple of hours. Don't go anywhere.
Welcome back. Well, back home on the Lal Street on Friday, the markets reversed the Thursday losses and ended on a high note. The Nifty reclaimed 10,700 while the Sensex closed with gains of around 380 points. The Nifty Bank also ended with gains but off the high. Well, we have a lot of cues with regards to crude prices, Trump tweeting, etc. Nigel, what can we expect for today?
Absolutely, Ekta. You know, that tweet, but I'm not seeing the impact on Brent crude prices actually. Early this morning, as we have at the Asian markets, they're more or less mixed. The SGX Nifty is indicating more or less a flattish start. The big cue over the weekend was that, in fact, President Trump, he said he spoke to King Salman of Saudi Arabia, and they are talking about increasing production by around 2 million barrels approximately. Now, that's clearly not happened in terms of an impact on Brent crude prices, because Brent crude prices are still holding above $78 on a per barrel basis. So just keep that in mind. That tweet, yes, it's positive. You know, if they're going to be talking about increasing production, it'll be great news. But for the time being, Brent crude prices have just ignored that. Still holding above $78 on a per barrel basis. But Friday's trading session, superb. We saw a relief rally on the Nifty, a good start to the July series on a closing basis as well. The Nifty did conquer the 50 DMA, and it ended virtually at the high point of the day. So the bulls will be feeling good, not just because of the Nifty, but the mid-cap index as well. After a while, we had way more stocks that were advancing in comparison to the number of stocks that were declining. By the end of the day, we said, what did the institutions do? Well, the FIs, they sold, but they sold a measly 150 crores. So that we could take, because the DIs, they pumped in big money. They pumped in close to around 2,000 crores approximately. Big inflows what we saw. It was the final day of the quarter. Maybe some NAV propping could have been seen on that front. And also a couple of large trades is what we saw. But it was a very encouraging trading session because the star performer, that's HDFC Bank, that didn't participate. And yet we ended with good gains. Just take a look at the frontliners that contributed. Reliance, HDFC, L&T. They did enough to take care of what HDFC Bank couldn't do. Even the Nifty Bank eked out some gains when the largest player in there, that's HDFC Bank, that in fact dragged the index by around 100 points. And yet the Nifty Bank put on roughly around 40 points, telling you that it was a really good trading session when your star performer like an HDFC Bank doesn't perform and yet you end in the green. It's pretty good news. Well, on the whole, there was some short covering that we saw on the Nifty Bank futures. Remember, we are seeing a more number of shorts on the Nifty futures because it's trading at a bit of a discount of around 20 points approximately. But the FIs were very bullish in the derivatives market. They added long contracts close to around 17,000 contracts. So that takes a long position to around 40% odd. They bought more calls than puts, and in fact, they wrote more puts than calls. So on the whole, FI is bullish in the derivatives market. What are the levels you're looking at today? On the upside, the 20 DMA, that comes at around 10,745 approximately. So if we get up and going, then you'll be looking at a bit of resistance at that level. On the downside, on a closing basis, we conquered the 50 DMA. Today, in fact, that will become as a bit of a support for the bulls. And also keep an eye out on the GST collections, Ekta. Yesterday we got these numbers. 95,000 is what the collection is, for the month of June. Piyush Goyal is talking about 1.1 lakh crore. We'll have to see that number more than 1 lakh because now the run rate for the remaining 9 months is around 1.08 lakh. So we'll have to keep an eye out on that front as well.
Okay, but stocks? Stocks,
so we'll watch out for Tata Steel. It ended well in the green in Friday's trading session. It will open up in the green as well today. There were two key hurdles. One was, are they being too aggressive domestically? The second was, will Tata Steel and ThyssenKrupp go ahead with that JV? That's got the green signal, so that stock will open up in the green for sure. You have Coal India. Well, offtake numbers look pretty good. 8.5% growth is what we saw there. But what looked really good was the auto sales numbers we got over the weekend. Maruti's numbers, in spite of a bit of a shutdown, delivered a 36% growth. So good going there. Mahindra & Mahindra CV growth of around 27%. PV growth, passenger vehicle growth of around 12%. Good going there. Tata Motors, out of nowhere, those numbers look very good. So CV sales are up by nearly around 50%. PV sales are up more than 63%. So great going for Tata Motors. Stock should open up in the green. Royal Enfield, well, thumping ahead. An 18% growth is what we saw. 75,000 units. Even the CV sales are quite good actually from Eicher Motors. So that should be looking quite good. So auto sales on the whole were good. In early market, we'll get Bajaj Auto's numbers. Nomura has their estimates of around 3.86 lakh units. So let's see whether or not they meet expectations. Keep an eye out on that stock, particularly I think in the first few minutes of trade, we should get those numbers. Thermax, they won an order from an Indian steel company, so good going there. Peninsular Land, they're talking about signing an MOU with regard to a sale of a property in Hyderabad. Small amount, 95 to around 100 crores. So keep an eye on that stock. Bharat Financial, second time in the last week or so, we are seeing they're undergoing some, the second securitization of this year itself. That was around 800 crores. For the year, they've already done 1,400 crores approximately. Welspun Enterprises, they have received the provisional certificate for commencement operations at the Delhi Meerut Expressway. So keep an eye on that stock. And two new kids on the block today. We have REITs that will be listing. So keep an eye out on that one. It's expected to be a good listing. And Fine Organics as well. Watch out, both these two should open up in the green.
Excuse me. All right, Nigel. Thanks very much for that. So that's what we can expect in terms of the markets and stocks. Time for a break now. But up next, a CNBC TV18 news break confirmed. Insurance regulator IRDA approves LIC IDBI Bank deal. Details once we're back. Welcome back. Well, we told you first, and now the first hurdle has been crossed. The insurance regulator has waved the green flag for LIC to invest into IDBI Bank. The approval is for an investment which could take LIC's stake to the bank to 51% with an investment of 10,000 to 13,000 crores. Lata's here with all of the details this morning. Lata.
Well, it is still extremely confusing. All we know is that the IRDA has given permission, which is not small in itself because it's policy owners' money that is on the line, and therefore the IRDA permission was always something that was crucial. The point is, you know, LIC may not have management control is what sources have told our Delhi reporters, and that the investment will be in tranches. So it's not that they're getting into 51% right away. They'll probably buy some stake, get to perhaps 40% first and then come over to 51%. They also said that in 5 to 7 years, they will bring down their stake to 15%. So this very much looks like warehousing and eventually looking for a bigger buyer. The beneficiary clearly is government. But even over there, we do not know whether part of the government stake will be sold to LIC or whether all of them will be in the form of new shares, in which case the money will come to IDBI. Absolutely nothing is clear about the contours of the deal. And the more important point is, of course, 2 other regulators have yet to give their nod. SEBI will have to waive the open offer clause, which it has done in the past in other government companies buying government stake like HPC, LMRP, ONGC. The Reserve Bank also will have to give its approval in several ways. You know, there is a conflict of interest in LIC holding stake in several banks and owning a bank in itself. There is also a financial stability issue. Anybody who buys a bank has to be fit and proper in the eyes of RBI. So all those tests also have to be passed. But at the moment, it doesn't look like anything material has changed. Government is a beneficiary because it does not have to capitalize IDBI. In the very least, that saves up about 8 to 10,000 crores. It may get a little more money if LIC were to divest, buy a bit of the government stake. And for IDBI itself, the important point is it's getting capital. But that was always expected, either from the government or from LIC. Now it will get capital. So nothing materially changes. I don't expect the IDBI stock to be very happy today.
Okay, all right, Lata. Thanks very much for that. Well, meanwhile, CNBC TV18 learns that the government will seek the cabinet nod for the deal only after all regulatory approvals are secured. Sapna is here with more details on this. Sapna.
We are given to understand that in all likelihood the LIC IDBI bank transaction may require a cabinet nod. This is the indication that we are picking up here in New Delhi. The fact also remains that the deal will not be final till all the regulatory approvals are in, and the government is very clear on this front. Basically, all approvals, all the regulatory nods will have to be in place before this deal becomes a success or even is close to conclusion in terms of the policy nod. The third aspect, of course, is that we pick up that probably, the numbers that were quoted earlier as to how much IDBI bank requires in the current financial, probably that was slightly on the higher side. What we are given to understand is that approximately 8,000 odd crores is what the bank needs in FY19, which is not a huge amount, so to speak. We are also once again given to understand that probably LIC is aiming at a 51% shareholding overall in the bank, in IDBI bank, once the deal has been sealed. Apart from this, various queries have been raised in the public domain as to why the government, as of now, is not thinking of inviting private investors to pick up stake in the bank. And by the way, there are clear indications that there are quite a few of them there in the market. But here the concern probably for the government is that, private investors may pick up the stake cheap and later on indulge in asset stripping. Now, this could be a cause of concern for the government later on in case the deal is questioned. So probably the entire rationale of why the government as of now in principle is interested in hiving off the stake, or rather selling its or bringing down its shareholding in IDBI bank in favor of LIC, probably that would find a mention somewhere at the time the cabinet nod comes about. This is what we are given to understand in terms of all the approvals and the processes that will be involved till the deal reaches a conclusion. Till then, it's a wait and watch.
Okay, all right, Sapna. Thanks very much for that. On that note, let's hear out what market experts make of the IDBI LIC deal.
IDBI started as a long-term lending institution, and they all focused on providing long-term funds to a whole host of industries. The domain expertise resides in IDBI even today. If you look at LIC, LIC is having a whole host of long-term, very long-term funds. And I think it's an excellent cultural mix. And,
So you're not unhappy with the mix?
I am very happy with the mix.
What is changing? In my opinion, nothing is changing. It was a government-owned bank. It continues to be a government-owned bank. The equity only gets done from one government arm to another government arm. Now, coming to this, it all depends upon what is the understanding between the bank or between the government and LIC. I would say, if you look at it, nobody has touched upon the issue that although LIC may be owning 30% or 40%, but their voting rights will be only 15% because RBI doesn't allow anybody to vote beyond 15%. So they may have 51%, 60%, it is immaterial because the voting right is capped at 15%.
I'm a bit surprised that IRD has given the approval because hitherto I thought both the bankers holding the LIC insurance company and insurance company holding a bankers was not really acceptable. Second thing is, I think, if I'm not mistaken, IDB also has a mutual fund. So you're going to have a scenario that the LIC has also like a mutual fund. Now that they're going to become majority owner in IDBI, they're also going to have a mutual fund. Are they going to get merged? One. Second thing, they also have a stake in UTI also, which is a third mutual fund. So you're going to have a scenario where SEBI also will come into picture, saying that they are effectively having stake in 3 mutual funds.
As far as the SEBI is concerned, this offer to making an open offer beyond this 26%, the 25% open offer has to be made, and that SEBI has powers to waive. My only problem is the regulator, banking regulator, will have a lot of issues to deal with and grapple with before this is being, before permission is given. Kind of restrictions they may put in for the purpose of financial stability. Whatever they would put in, we need to see whether that is going to affect the free ability of IDBI Bank to function.
Well, time to slip into a short break. Up next, the auto sales for the month of June have come in strong. We'll get you the details on the other side of the short break.